Okay, let's share the slide and continue. So are we there? Okay, we continue. CFD. CFD stands for contract for difference. It's similar to when MTN give you a loan of 100 naira. You can only be allowed to use 95 airtime, while 5 naira go as an interest charge. Now, for instance, if you want to buy an item for 100 US dollar and you only have $10, you can ask the broker to give you a leverage of $90. Then the rule of CFD is that if after selling you have a difference of 100 naira in your equity. So look at the chart there. You buy it at 100. If you make a profit, there is going to be a difference between buying price and selling price. So if there is a difference, the law of CFD applies. First, they are going to charge you charge. And any profit will be shared between you and the broker based on the amount each person invests. It's going to be shared because you invested 10, they invested 90. But where there is a loss, there is no charge on you. And then the loss will be shared in ratio 1 to 9. That is what we call CFD. Some brokers make CFD compulsory. Some brokers make it optional. In Nigeria and in US, any broker that make their own CFD compulsory, they will not be regulated. Are we getting it? Good. Next slide. Regulatory body in Nigeria, which is Central Bank of Nigeria, may accept broker to operate or not to operate within the country based on 3 conditions. 1, the amount of charge on bullish outcome. 2, other hidden charges as they may be. 3, the item in which the CFD is applied. If regulatory body accepts CFD of broker, the broker is said to be regulated, and its services will be available to the country in question. Otherwise, its services will not be available to the country. eToro that you were trained on its platform is not regulated by Nigeria and it's not regulated in USA. You can visit the link there on your screen, www.cfd.ng, to see those brokers that were regulated by Central Bank of Nigeria. Your safety in Forex depends on 2 bodies. One, your broker, the second one, your regulatory body. Your broker can protect you by its own financial strength and by the less charges and penalties they apply on you, and availability of resources that you can learn, including coaches. While your safety on the regulatory body of your country is the ability to regulate wisely in order to save you, the trader. The next question, can I operate multiple brokers to increase my gains? Some people will say if I have different brokers and put money in all of them, I can increase my gain. Technically, the answer is no. Stay with one. Because their charges may accumulate and become a burden on you. Two, it will give you a diverse attention and you may lose focus in your trading. Time may not be available for you to visit all of them. A mistake may creep into taking position. You want to buy in AvaTrade, you now go to FXCM and buy. Something like that. Now, the next thing is 1x means you don't ask your broker to give you any money. You use your own money. So if you are using 1x, you are having a small money, it will be very difficult for you to trade. Trading with money that is so small is very difficult. The implications are all risks are on your capital and you alone. And you cannot buy expensive item with small money. Slight loss will finish your entire equity. And profit naturally come very small. We look at some working solution that will minimize the implication. The best recommendation is to go for currency pairs when you are starting your live trading. Why currency pairs are the best option? They are cheaper. Some of them are $0, not up to $1. And they fall and rise in PIP. And the PIP will translate to small amount of money. Loss come in small amount and over a time. And there are availability of factors for fundamental analysis. Pairs and commodities are the only item in FX that can make FX a full-time profession. Supposing you want to make FX as your means of earning livelihood, it's only currency pairs and commodities that can sustain you. The best currency pairs you may trade with are USD Euro, USD Japanese Yen, USD CAD, which is Loonie, GBP USD, USD CHF, and AUD USD. Now, GBP USD is known as cable. That's the name. Cable. And cable sometimes is not a very good pair. Euro USD is known as fiber. USD CHF is known as Swizy. GBP JPY is known as Guppy. Euro JPY is known as UP. AUD USD is known as OC. NZD USD is known as Kiwi. While USD CAD is known as Loonie. Euro GBP is known as Channel. These are technical names given to these pairs. So when we say Loonie, you should know what we mean. If I say fiber, you should know what I mean. If I say Kiwi, you should equally know. You study the volatility of each pair, study the region size of the base with respect to the counter to arrive at common market move, which we call the box size on swing triangle. Each time an influencer comes, drop in the box and see which side the swing will move to. Study currency correlation matrix, which we are going to also do it later on. Next slide. Use two tools combination, one that is not so sensitive and one that is so sensitive. Like if you are using stochastic, combine it with MACD. So as we study the tool, you can see some complementary tools to assist any tool that is not standalone. The third tool I will recommend is when the two tools confuse you on what to do, it's your lifeline to see the market sentiment. While trading, use two accounts, live and demo. Practice in demo before you go to live and practicalize. For instance, we have stochastic combined with MACD, where MACD will show you fake signals. You can see on the chart there. Can you see any fake signal? There are signals on stochastics which MACD is saying they are fake. That's instance I'm talking about when you are using two tools. Next. Like here too, on AUD, CAD you can still see some fake signals filtered out by MACD. Note. On your demo or virtual account, you buy an item based on the buy signal from your face tool. Observe when you start making gain or when market goes bullish, then move to your live account. On your live account, use the complementary tool. If there is still a strong buy signal, then you buy. If buy signal is weak, use Bollinger Band to know. If more than 50% are buying, then you can buy. Do not buy if the buy signal is fake in the live. On your demo or virtual account, sell based on your stochastic as the best tool, but take action in your live account before this. On your live account, check the complementary tool. If there is a strong sell signal, then you sell. Otherwise, if signal is weak, you check Bollinger Band. If more than 50% are selling, then you can follow them. Do not sell when there is a fake signal there. Know that it is extremely difficult to trade successfully with small equity, like $100. And there are 11 reasons why you lose money even when you are a professional trader. Professional traders also lose money because of these 11 reasons. 1. Insufficient startup capital will force the trader to lose money. Poor risk management. Not accepting responsibility for loss and mistake will make him to continue to lose. Over trading. He doesn't break. Risking too much. Poor Forex trade management or no trade management at all. Not having a trading style. Unrealistic expectations. Trading addiction. He was addicted, always trading. Market and trading get into your head and affect your style, believing you will never be wrong. These are the 11 reasons why professional traders lose money. Now, the comparison when you have small money in your account and big money is like what you are seeing on the screen. You take these two cars to battlefield. Which one do you think the person will come back alive easily? The ammo car. Good. The other car, hardly the person will come back alive. Ammo car is when you have enough money in your account. And then the small car when you have small money and you go trading.
Like, so what is the risk equities to start off?
No, startup is small. I think maybe the question you are talking about, how much equity will you be in ammo tank?
Yes.
$100,000.
$100,000.
That's about 16 million. How many million is it? Yes. Times 500, which is around how many million? 600 now. How many million?
Like, sir, 5 million is not enough.
It's not enough. It's not enough. By the time your account will become an ammo car, stable. So that should be the amount you are going to use. Are we getting it? So you know that question? Sufficient equity, let's look at it here, which is answering your question. $100 you are using Kekena Pep. To go where? To go to a betting. This one is obituary already in Kekena Pay. So you are using $1,000, you are using a small car like golf. You are better than Kekena Pay, but you too, you are danger. Then when you are using 10,000, you are having a Jeep going for the battle. When you have 100,000, you are having an ammo car. Good. 50 million naira. Good. Or 60 million even. Now, these are some mistakes. There are some mistakes in our virtual, but in your life, you need those mistakes. Mistake associated with buy is either you buy earlier before the signal, or you buy late after the signal. In life, buy late. And then in sell, there are two mistakes. You sell it earlier before the signal, or you sell it late after the signal. In live trading, sell it earlier. So when you are in live trading, buy late and sell earlier to avoid early morning loss and anything that will come thereafter. Choice of a pair. To choose a currency pair that you are going to use as your favorite. From now, we are going to drill you on how to choose your favorite pair. The first thing to look at is liquidity. How easy can you buy and sell the currency? The easier it is, the better. Then the price stability. How often its price change? The larger the time, the better the pair. Predictability. How much information can you gather about the pair to know what the future may likely hold for the pair? The more information you can get, the better. And the pairs are grouped in three. We have what we call the major pairs. A major pair is any currency pair having US dollar inside. It's called the major pair. Example, loonie. We have the cross rate or the cross. Any pair having UX, not having USD, is called a cross, like GBP yen. Then we have the minor. Minor is a cross having currency of very large geography, like Euro, like Australia. Okay, I'm coming. Okay, let me go. So let's take a look at those pairs. We have the Pi Baba, Euro USD, which is a major pair. 9 a.m. to 3 p.m. is scalping period. 3 p.m. to 5 p.m. is full market activities. You can get full profit, full loss. 5 p.m. to 10 p.m. is another minor activities. GBP USD, that's cable. 9 a.m. to 3 p.m. is smaller profit for scalping. 3 p.m. to 5 p.m. is long-term investment. USD JPY. 3 p.m. to 10 p.m. is smaller profit for scalping. 12 a.m. to 7 a.m. minor activities. So the list continue. Study it. Okay, carry on.
Yes, like for instance, the things you share on the platform yesterday, being that JPY is
Sorry, I'm coming. Okay. What do you say again?
like being the JPY
Yes.
stagnant,
The what?
the JPY currency.
Yes.
I think you say the currency is stagnant.
And not actually stagnant. Safe harbor.
Okay.
It doesn't change quickly.
Okay. Does that does that actually happens, or it has been for a while?
It has been for all time. For long period of time. That is how Japanese yen is. That's why it's called safe-haven currency. It's the only one.
So one can just hold it as
You can do what?
one can just hold it as his trading phase.
As what? To sell it or to buy?
No, always to trade it, always.
Yes, but you have to do your analysis.
Yes, I understand.
Yes.
It has low risks, minor risks when it comes to risk management.
No. No. It doesn't mean it is having low risk. You can have a loss. What we are trying to say, in a pair not having Japanese yen, the counter is pushing. The base is pushing. But in Japanese yen, the counter push is less.
It's less.
So once the base, you are sure of it, you can.
Means if you get buying or a buy signal, when you buy, meaning you are getting a huge profit.
You may get huge profit if there is nothing wrong with the base. In other currency, you are studying the base and the counter. In Japanese, you only study the base. Less work instead of studying two items. Are you getting it? So are we together? Okay. Any other question? Any other question? So the next thing I want you to download is the FX pair clock. It will tell you the time for each of the currency pair, the right time and what you are supposed to do. The link is there on your Windows. I give you 2 minutes. Download the software. If you already download, you can download. Maybe there is an update. So now let's see the next screen. This is how the software look like. If you run it, in the paste combo box here, you are going to choose the pair you want to study. Like the one chosen now is AUD-CAD. As soon as you choose it, it will show you the time in Nigeria. Here, Nigerian clock will be reading what will be the time. Like at the time of capturing this screen, in Nigeria it is about 9 hours 8 minutes PM in Nigeria. In Canada, Canadian dollar, it is 4 o'clock and the market is open. The Central Bank of Canada is open then. While in Australia, it is 6 early in the morning and their central bank is not open. That is why it's red. So when you click seek advice, it will tell you the advice. Minor activities occurring, profit and loss come in small number. This time payable scalping traders. This is how to use the software. It will be giving you time for central bank. If you are trading, okay, currency correlation, I don't know whether can we enter it today? You can enter. So, if you are trading the British pound against the Japanese yen, GBP JPY pair, for example, you are actually trading a derivative of the GBP USD, they are linked, and USD JPY. Therefore, GBP JPY must be somewhat correlated to one, if not both, of these other currency pairs. Correlation means as one is moving, the other one also is affected. Positive correlation means as one is moving, the other one is also moving at the same direction. The negative correlation, as one move up, the other one move down. There is always a derivative of currency pair. Correlation between derivative and pair ranges from +1, which is perfect positive, to -1, which is perfect negative. +1 means as derivative rise, pair also rise. While derivative falls, pair also falls. -1 means pair moves opposite of derivative moves. Now, the essence of studying the coefficient of correlation of a matrix is for you to practice any of the two. There is what we call the negatively correlated hedge trading, and there is what we call the positively correlated hedge trading. The negatively correlated hedge trading, the aim is to offset loss, to take care of loss. Example, if you put $10,000, that is 0.1 lot, into Euro USD, then you will now look for a negatively correlated currency to Euro USD, which is USD CHF. And their correlation is -8. So if you put 10,000 there, you will now put 8,500 into USD CHF. Now, when you do that, you buy the two pair like this. By the time Euro USD falls, giving you 1,000 lost, USD CHF will rise to give you 850 profit. Because if this one falls, this one will go up. Now, when you add and subtract and balance, instead of a loss of 1,000, you only have a loss of $15. The other one has taken care of the loss. That's the wisdom behind negatively correlation hedge trading. Are we clear? The second one is to do the positively correlated hedge trading. Here the aim is to have a simultaneous profit. Example, you put $10,000 in Euro US dollar, then you are also going to invest 8,500 in GBP USD, which is the positively correlated of Euro USD. If Euro USD give you a profit of 1,000, GBP USD will give you a profit of 850. Instead of having a profit of 1,000, you end up having a profit of 1,850. That's the wisdom of hedge trading. You can do the negative, you can do the positive. If you are a bear, you do the negative. If you are a bull, you go for the positive. Are we together? Now we are going to start studying the correlations proper. So are we ready?
Yes.
Okay. The first screen, we have the currency correlation matrix of Euro USD. And then we have the relationship it is having with the remaining currencies, the AUD USD, USD JPY, GBP USD, NZD USD, USD CHF, and USD CAD. And then we have the period as rows. Normally, the first period will favor scalping traders. The 3 month will favor the 1 day, the day traders, and the 6 month favor the swing traders, and 1 year is a long time favoring the position traders. So, in 1 month for scalping, what is the positively correlated currency to Euro USD? You look for the one with the highest positive number. GBP USD, yes. That is the positively correlated currency to Euro USD. What of the negative? USD CHF is perfect. So let's write it down. Let's be writing this down. Then what of the next? That should be the 3 months. What is the positively correlated? GBP USD the same. What of the negative? USD CHF. Good. Good. Write it down. Yayi? Yaki? Yaki? Okay. CSS bai iya affecting nasa? CSS bai kamata ba ko? Kuma wani waje kai yayi outside ba? Okay. Okay. Then what of 6 months? Yes, 2 pairs. The negative one is what? The same USD CHF. Write it down. Then finally 1 year, you have in NZD USD and USD CHF. So you can see USD CHF is the negatively correlated currency to Euro USD in all styles. Mark it. And GBP USD appears for the short time, and then for the long time is NZD USD. Carry on.
So, for these 6 months, we are having two pairs, GBP USD and NZD USD.
Yes.
Positive correlated.
Yes. Yes.
And why do we choose NZD USD?
Because when you look at 1 year, between GBP USD and NZD USD, which one is the positive correlated?
NZD USD.
And that is why I say for the long time, NZD USD can be applied. Because when you take it for 6 months, it's not applicable in 1 year. That's the reason. Do you get it?
Yes.
Good. Next slide. Gaba daya. Subhanallah. To me ne wannan irin haka? Yes. Subhanallah. Ni ma na rasa menene duka solution na guda. Kuma ainihin code din ma na passport din daga wani na dauko wanda ke aiki sai na saka a wajen. Ka gani? Subhanallah. So are we in the next? The next one is AUD USD. 1 month, which one is the positive? NZD USD. And the negative, USD CAD. Good. Write it down. 3 months, NZD USD and USD CHF. 6 months, NZD USD, and we have aggregate. GBP USD and USD CAD as negative. 1 year, what? For 6 months. The negative are 2. GBP USD and USD CAD. 1 year, we have NZD USD as positive, and the negative are 3. GBP USD, USD CHF, and USD CAD. Write it down. Ba kai online ba. Ba kai online ba. Offline ne yake. Okay, are we done with that one? So we move. The next one is what? What's the pair? Euro USD. It's not yet, yes. Euro USD. This one is having more options. So normally we join the 1 week and the 1 month together. The 3 months separate, 6 months separate, and 1 year. So, can we get the positive? I give you 1 minute. If you go the positive in each row and the negative in each row, then I will ask you to tell me. 1 minute, do everything. Okay, daga template din ne ko? Okay, amma in shigo templates din. Okay. Akwai wani setting da suka yi a cikin template din kenan. Image. Okay. Na gani. Okay. So can we have for this at least before we close?
Yes.
For the 1 week, what do we have? USD CHF, positive, negative.
Negative. USD CHF negative.
Okay, what of the positive?
AUD USD.
What of 1 month?
NZD USD.
Positive.
Positive first. Yeah.
Negative.
USD CHF.
Good. 3 months.
GBP USD.
Then the negative.
USD CHF.
Good. 6 months.
NZD USD. For 6 months. Yes. Euro 71 USD.
Okay. Then the negative. 1 year. Then the negative. So USD CHF is the negatively correlated in all cases. It's only in the positive, the short time and the long time differs. So we write it down. And any question before we end the class? Any question? Okay, so we draw the curtain here, and next week will be our final day. Yes, by next week we'll round up our class, so you try as much as you can to make sure you do enough trading. We need 35 by next week for you to graduate. Yes. So thank you very much.